The Senate Banking Committee just put the most important crypto vote in American history on the calendar for May 14th. And the fact that you probably found out about it here and not from your financial advisor, your bank, or the mainstream news tells you everything you need to know about who this bill threatens. The Clarity Act vote is 5 days away. Most crypto holders are sleeping on what it actually means, and the window to understand this before it happens is closing right now. The Senate Banking Committee will hold the Clarity Act vote on May 14th, even as banks oppose the proposal, warning that stablecoin rewards could compete with savings accounts and pull deposits from traditional lenders. Crypto firms, including Coinbase, now support the updated language after a compromise from Senators Tom Tillis and Angela Alsobrooks. Democratic support remains unclear, with unresolved concerns over how politicians can profit from digital assets. The bill may still change before any full Senate vote, but what will this do to your money? Here is what this actually is and why it changes everything. For years, the crypto industry has operated in a regulatory no man's land. The SEC claimed jurisdiction over certain tokens. The CFTC claimed jurisdiction over others. Courts made rulings, regulators issued guidance, and none of it was law, none of it was permanent. A new administration, a new SEC chair, a different political climate, and everything could flip overnight. That uncertainty is not an inconvenience. It is the single biggest reason institutional capital has been sitting on the sidelines instead of flowing into the market you are holding. The Clarity Act fixes that by sorting every digital asset into one of 3 buckets: securities under the SEC, digital commodities under the CFTC, and stablecoins under a shared framework. That is not a minor administrative reshuffling. That is the federal government drawing permanent lines around what crypto is and who governs it, locked into statute that no regulator can reverse with a press release. And here is the part that hits directly for anyone holding XRP or any ISO 20022 compliant asset. The SEC and CFTC jointly classified Bitcoin, Ether, Solana, and XRP as digital commodities on March 17th. But that classification is an interpretive release, not statute. A future administration could reverse it. Read that again. Everything the XRP community celebrated in March of this year, the formal classification as a digital commodity, exists right now as a regulatory opinion, not a law, an opinion. One that the next administration, the next SEC chair, the next political shift could undo without a single vote in Congress. If the bill passes, XRP's classification will be locked into federal law. No future SEC administration will be able to reverse the March 17th classification of XRP as a digital commodity. That is the difference between building a house on sand and building it on concrete. The house looks the same from the outside, until the tide comes in. Now let's talk about the fight happening right now inside this bill, because this is where most coverage gets lazy and just says banks versus crypto without explaining what is actually at stake for you. The text prohibits crypto firms from offering yield on stablecoin deposits if that yield is the functional or economic equivalent to banks' offerings. Banks lobbied hard for this. Their argument, stated plainly in a letter from the American Bankers Association and Bank Policy Institute, is that stablecoin yield earning could reduce all consumer, small business, and farm loans by 1/5 or more. Think about what they're actually saying there. They're saying that if you're allowed to earn meaningful returns on stablecoins the way you would on a savings account, people will move money out of traditional banks and into crypto, and they're asking Congress to write a law preventing that from happening. The banks are not arguing that stablecoin yield is dangerous to consumers. They're arguing it's dangerous to them. That is a critically different thing, and the distinction matters enormously for how you read this bill. Circle's chief strategy officer, Dante Dispart, endorsed the compromise, saying it marks meaningful progress. He pointed to USDC's growth in cross-border payments, capital markets collateral, and agentic commerce, and stated, "The United States faces a clear choice in digital assets: lead or be led." Lead or be led, that's the choice sitting on the Senate Banking Committee table on May 14th. Now, here is where the political picture gets genuinely complicated and why this vote is not a certainty even with the compromise in place.
There are conflict of interest ethics provisions targeting the Trump administration that could stymie the bill's progress. Senator Ruben Gallego has referred to an ethics provision as a red line. If Democrats pull their support, the bill could be stuck in committee, which needs a simple majority vote, though Republicans hold the edge. And Senator Brooks, who co-authored the stablecoin yield compromise, said she was satisfied with that specific agreement, but that other areas raised concerns and the bill needs more compromise before she can support it. The co-author of the compromise is not yet a confirmed yes vote on the full bill. Let that sink in. The odds the Clarity Act passes in 2026 jumped from 46% to 64% on Polymarket after the stablecoin compromise was announced. 64%. That is not certainty. That's a coin flip with a slight lean, and the consequences of the coin landing on the wrong side are severe. If Tim Scott doesn't schedule the markup before Memorial Day recess on May 21st, or if the markup happens but Republicans can't unify the committee vote, the bill will most likely be shelved until 2030. Not next year, 2030. 4 years. 4 more years of the legal gray zone. 4 more years of institutional capital waiting for legislative finality before deploying at scale. 4 more years of the banks holding the advantage while crypto fights for legitimacy on a case-by-case basis in courtrooms instead of in statute. That timeline is the stakes on May 14th. And here is the larger context that almost nobody is framing correctly. This bill does not exist in isolation. The Clarity Act passed the House with a 294 to 134 vote on July 17, 2025. A bipartisan supermajority of the House already voted yes. What is happening now in the Senate is a debate about who controls the framework and what it allows. Banks on one side, crypto on the other, and the outcome determines which industry writes the rules of the next decade of American finance. Banks cannot build payment rails on top of digital assets that exist in a legal gray zone. The Clarity Act, if passed, removes that barrier. Every institution that has been watching and waiting for legislative finality, every bank that wanted to custody digital assets but needed statutory clarity, every payment provider that wanted to integrate blockchain settlement but needed a compliance-grade legal foundation, gets their green light the moment this bill is signed. If both the Genius Act and Clarity Act are fully implemented by late 2026, the Ether altcoin market could enter a period of sustained institutional adoption that looks fundamentally different from the retail-driven speculation of previous cycles. Not a pump, not a cycle, a structural shift in who is buying, why they're buying, and how long they're holding. May 14th is not just a committee vote, it's the moment we find out whether the United States chooses to lead the next financial system or watches from the sideline while other jurisdictions build it without them. And you're watching it happen in real time, while 99% of the investing public has no idea this date even exists. If this video gave you clarity on what is actually at stake this week, hit the like button right now. The algorithm uses that signal to reach the people who are holding crypto without understanding the regulatory battle that determines whether their assets gain institutional legitimacy this year or in 2030. Subscribe because when May 14th arrives and the vote happens, this channel will break down exactly what the result means for your portfolio before the mainstream figures it out. And drop a comment with this question. Do you think the Clarity Act passes the committee vote on May 14th? Yes or no? I want to see where this community's conviction actually stands right now. Share this with every crypto holder you know who has not heard the date May 14th yet. The vote is 5 days away.